Something's moving beneath the charts, fast, quiet, and deliberate. What you're seeing isn't volatility, it's withdrawal. The world's biggest players are shifting capital away from the dollar system before the headlines catch up. This is Global Pulse 360 Live. And this is the capital flow reversal. As of November 5, 2025, the US dollar index stands at 98.2, falling for the fourth week in a row. Spot gold climbs above $2,435, up 1.2% this week with ETF inflows exceeding $3.6 billion. The 10-year US Treasury yield hovers at 4.03%, signaling bond demand from foreign buyers. Oil trades near $78.50 as OPEC supply cuts meet slowing Western demand. These aren't isolated data points. They're the pulse of a controlled liquidity migration. In the last 72 hours, several Asian central banks quietly adjusted their currency reserves, reducing US exposure while boosting gold, energy assets, and regional swaps. The public won't hear it in press releases, but it's in the settlement data. Capital flow trackers show net Asian inflows up 7.8% month-on-month, the largest rotation since pre-pandemic liquidity cycles. This isn't diversification, it's defensive autonomy. In Washington, the Fed's balance sheet contraction has reached its longest streak since 2018. Liquidity is thinning, but volatility isn't spiking, because global markets have learned to build their own oxygen tanks. Europe tightens, Japan intervenes, but the core signal is the same. Dollar liquidity is no longer the only bloodline. Meanwhile, sovereign wealth funds from Singapore, the UAE, and Norway are reallocating billions into commodity-backed assets and infrastructure, hedging not against inflation, but against monetary centralization. Money moves faster than policy. The US still controls narrative, but Asia is now steering the oxygen. Hong Kong's liquidity hub recorded its highest USD offloading since 2019. In Shanghai, cross-border yuan settlements surged 26% YoY. The so-called fragmented system is quietly turning into a multi-core structure. Power doesn't vanish, it migrates. And this migration is no longer theory, it's data. If you track the money, the map is simple. Follow cross-currency swap spreads, especially USD, JPY and USD, CNH. Watch sovereign fund filings for new gold accumulation. Monitor bond yield compression during low-volume weeks. That's capital repositioning. When gold, oil, and emerging FX rise together, the reset isn't coming, it's executing. If you want the data before it becomes the headline, subscribe to Global Pulse 360 Live. We track the flows before they reach the surface. The reversal isn't speculation, it's already priced in by those who saw it first.